Hi, everyone, and welcome to SouthStar Battery Metals live corporate webinar. This is Will Mays with RB Milestone. SouthStar is focused on industrial minerals and battery metals for clean energy revolution, and is currently developing the Santa Cruz Graphite project in Brazil, one of the premier battery metals jurisdictions in the world, and the BamaStar Graphite project in Alabama's Graphite Belt. SouthStar's shares are traded on the TSXV under the symbol STS and on the OTCQB under the symbol STSBF. Joining us today is the company's president, CEO, director, Richard Pearce, who will be providing an overview and timeline of current operations in Brazil and Alabama, as well as upcoming investor milestones. We'll also have an opportunity to hear from Mr. Roger Mortimer, who has recently joined SouthStar's board of directors and as an advisor. At the end of the presentation, we'll open up for questions for management to address. And if you're interested in asking a question and are logged into the Zoom app or web platform, you can submit your questions to us directly in the Q&A module. Please note this presentation is being recorded today, Wednesday, August 30th, 2023, and will soon be made available on the company's website, which is www.southstarbatterymetals.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by forward-looking statements will occur, and if they do occur, what benefits the companies will obtain from them. Also, some risks and uncertainties may be out of control of the company. SouthStar has a full disclaimer contained in their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now it's my pleasure to introduce Mr. Richard Pearce, Chief Executive Officer of SouthStar. Richard, the stage is yours.
Thanks, Will. Thanks for the introduction, and thanks for everyone for participating today. Just wanted to provide a corporate update about BamaStar, about Santa Cruz, about everything that's happening in the company. And very excited to have Roger participating today. Roger's a person that friend of a friend introduced us, and I think we've got a lot of synergies. Very excited to be working with him moving forward, and very excited to have him on our board just because of his background with capital markets, and particularly U.S. markets in general. But Roger, go ahead and please give an introduction to yourself and talk a little bit about your experience and kind of why you're excited about SouthStar and strengths around how you can help us.
Sure. Thanks very much, Richard. I'm really appreciative for the opportunity to play a role in assisting the company achieve its corporate objectives. And I've been a long-time global equity and commodity investor. And when I was introduced to it, I thought there were a number of things that were interesting about SouthStar. As an investor, I look for a favorable macro setup and then for the best corporate investment to capture that view. And for SouthStar, the macro is that investors don't yet understand the importance of graphite in the battery value chain. While virtually every battery formula uses graphite in the anode side of the battery, and while investors have been focused on lithium for the cathode, creating a multi-billion-dollar investable universe, they really haven't appreciated how critical graphite is. The IEA projects that graphite demand for the electrification supply chain could grow 25-fold by 2040. And the US today is almost entirely import dependent. 61% of raw graphite and 98% of upgraded battery material comes from China. And this dynamic is really important because geopolitics are increasingly becoming a factor in supply chain decisions. The U.S. Inflation Reduction Act, while it has climate objectives, is fundamentally an economic development program, building a group of new industries in the United States. And the U.S. is currently energy dependent on fossil fuels, and it's certainly not going to put itself in a position of dependency as it transitions to an electrified economy. So in this context, the provenance of your supply chain is critical. If you're investing billions in a U.S. battery manufacturing plant, you're not going to allow yourself to be in a position where the supply of the key raw materials for that plant might be disrupted. And this is an important point that investors have not yet really calibrated or put a valuation on. And so SouthStar's got a couple of specific advantages that differentiate it among graphite supplier choices. And the first is that what I would call a safe source critical metals company. Its production's in the Americas, in Brazil and in the United States, and this gives comfort to prospective customers. The second is that it's got near-term production. South Star Santa Cruz mine will be the first new graphite mine to start production in the Americas in more than 25 years. It's fully funded to production, it's permitted, it's licensed, it's in a mining-friendly district with excellent infrastructure, and has a 20-year reserve life with attractive economics and a good mix of flake sizes that command higher prices. So this is a very solid asset, and it's going to attract attention as it comes into production. The third is it's got a highly attractive U.S. asset. The BamaStar prospect in Alabama is the site of historical graphite mining that with 40-odd mines that were active in the 40s, and it's extremely well located for the emerging battery corridor being built in the U.S. Southeast. South Star's got an excellent management team, strong, proven execution capability, and I see it as a below-the-radar company in an industry that's going to become much more in the spotlight as battery plants get built in the U.S. So what attracted me is that I think that this company is extremely mispriced in the context of its assets and its opportunity, and I'm very happy to be working with you, Richard, to help communicate that to investors and help you execute your business plan. So I'll hand it back to you. Thank you.
Fantastic. Well, I think we're done here today. That was, I think, fantastic summary. And again, I've spoken with Roger for hours about everything around electrification, new technologies, hydrogen, other sorts of technology. So I'm really excited to have Roger on the team and looking to him for insights as it relates to everything that's happened related to electrification, be it in the EV space and the stationary storage space, et cetera. But I thought what we would do today is not go slide by slide through the slide deck, because I think the majority of the people on the call probably know the story pretty well, or I'm assuming they know the story pretty well. I thought what we would really kind of speak to is an update around activities. This first slide is really the plant that we're right in the middle of construction. So this is the Santa Cruz Phase 1 plant. We basically have the primary and secondary crushers, feeds into the mills, and the float circuit. This is basically our electrical control system back here. This is basically our filtered tails and our thickener. And then this is the drying and the bagging and the storage warehouse. So this is what we're right in the process of building. Again, this will be 5,000 tons of production. Phase 2, again, would be 25,000 tons, and Phase 3 would basically be 50,000 tons. So we are super excited to be spinning this up into production. As Roger mentioned, it's the first new graphite production in the Americas since 1996. We have a fantastic partnership with Sprott, who's provided $10 million US for Phase 1 construction, somewhere between 9 and 18 million US, our choice, for Phase 2. So we are 2/3 funded on our Phase 2 expansion. So see a lot of things moving forward quickly here. Again, it's a modular design and construction, which will allow us to basically scale these things quickly. And Phase 3 is really nothing other than a copy paste of Phase 2. So all the infrastructure that will be required for Phase 3 will be put in Phase 2. And this is kind of really one of the main slides I wanted to focus on today, and we can talk about everything that's happening at BamaStar as well as at Santa Cruz within this context really of what we have as a 5 to 7 year strategic plan. So again, Santa Cruz will be spun up in phases, Phase 1, Phase 2, Phase 3. The way it's set up in our model will be basically 2 years at Phase 1 production, 2 years at Phase 2 production, and then life of mine at Phase 3. And the idea is that basically our con plant in Brazil will be a almost identical con plant for Alabama, based on everything we've seen the process, flow sheet, mass balance, water balance, the design of the plant will be very similar, even to the fact that a lot of the equipment will be the same manufacturers. For Brazil, all the equipment is manufactured in Brazil by multinational companies for the most part. So a lot of that same equipment we can source in the US, but the approach is the same: modular design, phased approach into production. And again, it would be 2 years at phase one, more or less, stepping up to phase two of 50,000 tons at BamaStar. So as it relates to Santa Cruz, we'll always start with safety. And we've had very rigorous approach to how we're approaching safety. We've had 0 lost time accidents to date. We've got a fantastic team in place to kind of oversee, train, and make sure that everything is going according to plan. We track near misses. We post daily. We have daily safety briefings, etc. So I couldn't be more pleased with our process to date and the success we've had. Our contractors have been very receptive and very responsible in how they're going about it. So 0 lost time accident, again, that's a testament to the team, and couldn't be more pleased with that result. We're 73% complete on the build itself. So all the contracts have been signed. All the equipment is basically, excuse me, all the equipment is in the process. It's either on site or in the process of being shipped to site. The foundations and the concrete work is basically almost complete. The last part of what they're doing is kind of finishing off the walls, the retention wall, backfilling, things like that. So most of the foundations are complete. We should have that wrapped up here in the next 10 days or so. The electrical mechanical assembly is now underway. So they're underway in terms of assembling the thickener. They'll be getting started on the dryer system, the primary crushers, etc. So really exciting to see what'll it'll actually start to take shape here in September and October, and basically at the end of October we should be substantially complete in terms of the build. We'll obviously have tests going on as it relates to electrical, SCADA controls, hydraulics, and then we'll start the commissioning process. So we are on track basically for phase one production. The official date that we have on our schedule right now is basically January 10th of 2024, so end of year. I've asked our team to basically have the capabilities to produce 1-ton big bags for some strategic industrial size samples that we will be sending out to potential clients basically in November, early December. So we will be spinning up on schedule and on budget so far. So excited about that. Commercial conversations are continuing ongoing. We've got several that have requested 1-ton to 5-ton industrial samples so that they can run it through their process, and then they'd be ready to sign purchase orders for actual supplies. In terms of our phase 2 and phase 3 permitting, everything has been submitted. We have received questions, comments on both the mining permit as well as the environmental permit. Again, our anticipation is we should have those in hand by the end of this year, so that phases 2 and 3 will be able to move forward quickly. In terms of exploration and upsizing our resource and reserve, again, we've had some really interesting surprises in the field. For example, we were cutting a road into where the pit will be, and we found basically a 20 or 30 meter wide ore body at surface, and the average grade was 10 to 14%. So again, I think we'll have a lot of positive surprises here. We've had very good success with the geophysics. We are looking to basically get drills mobilized in Q4 of this year, and then be doing 3,000 to 4,000 meters. Half of that will be RC, half of that will be diamond drilling. And again, the goal is to upsize our reserves and deliver a feasibility study that incorporates phase 1, 2, and 3 for Santa Cruz by the end of 24. So that's kind of the big vision as it relates to Santa Cruz and where we're at. On BamaStar, again, lots of exciting things going on. The drill is over the last hole. So we will be completing somewhere between 1,850, maybe 1,900 meters of additional drilling. This drilling builds on the initial resource that we announced in March, and this is really looking to support our preliminary economic assessment, which again is scheduled for Q3, the end of March, basically, of 2024. And again, that preliminary economic assessment will present this strategic vision. So it's 2 mines, each producing around 100,000 tons of concentrate, and then a value add plant somewhere in the southeast corridor that is producing midstream and downstream product, including coated SPG. So that's really what we're moving towards in early of next year, and it will incorporate production of concentrates from Brazil, production of concentrates from Santa Cruz, and then the value add plant. And in terms of kind of what we are doing for that, I just spent a couple days in Alabama and a couple days elsewhere, really putting together the design of experiment for our midstream and downstream products. So we have talked with labs as it relates to purification technologies. What we're moving forward with as our baseline will be chemical purification. We will do an internal trade-off study around thermal, chemical versus other purification technologies, principally caustics more than anything else. But as a baseline approach, what we've decided to move forward with on the PEA will be chemical purification. Again, we're looking at micronization, which will take the larger size particles and micronize it to the different specifications. The shaping is really around how we produce spheronized graphite, and we'll be sending test samples to a variety of different equipment manufacturers. And finally, coating. Again, as a baseline, we will be moving forward with pitch coating as the baseline, so that what we're proposing to include in our PEA will be what is currently available on the marketplace, so that our products are competitive, can be compared to directly. So we're comparing apples to apples. We have talked to a couple different battery designers, labs that put together battery chemistry, figure out how to optimize that battery chemistry. And then we've also spoken with prototype labs that will then take that battery design, come up with the anode slurry, apply that to the copper, and then create a variety of different prototypes that will then test and compare to market standards. So super excited to kind of this visit has been really eye-opening in terms of the expertise available in North America and certainly Europe around these things. Unfortunately, there's not a one-stop shop that can do it all. So we are dealing with labs in both Canada and the US, but feel we've got a really good group of very experienced partners that have been doing this for a long time and can do everything from the purification through to the coated SPG and be able to put out very realistic, reliable study results. So we're excited about that and moving forward with that as quickly as possible. Again, this PEA will basically be scheduled for March of 2024. The feasibility study for Santa Cruz, again, is December of 2024. And then we are looking to move forward with a feasibility study of the PEA results at the end of 25, so that then we can make an investment decision. And our goals are to basically have Q2, phase 2 of Santa Cruz up and running, and starting construction of vertically integrated value add in Alabama in 2027. I'm going to just skip a couple of these slides because I really want to focus more on upcoming catalysts. Again, if somebody has questions, feel free to put those in the comments, and we'll get to them. Again, I can't emphasize enough the importance of being able to take advantage of existing infrastructure. Both projects have unparalleled infrastructure as it relates to most of the other alternatives out there. So we've got power, logistics, ports, water, existing pools of experienced communities that we can call on. So I really don't know very many other operations that can talk to this sort of level of infrastructure that's already existing. We don't have to spend a bunch of capital around this, and what this allows us to be is very low capital intensity, and in the same vein, first quartile of our cost. Overall, Santa Cruz will be a lower cost operation than Alabama, simply because of the oxide ore deposit that we have there. It's just a much deeper weathering profile than what we see in Alabama. But overall, unparalleled infrastructure that we can take advantage of. And again, this slide I always kind of point to, but it can't be underestimated. The three most profitable operating mines in existence today, based on benchmark study, are all in Brazil. So again, we're on strike from a couple of those. And again, this speaks to the quality of the Brazilian deposits, the Brazilian expertise that is available to us. And really, South Star is blessed in the sense that we can take 80+ years of technical and commercial experience and transfer that to the BamaStar project. And I'll just briefly touch on this again. For Alabama, we did our maiden drilling program and resource estimate, again, 22 million tons at around a 2.6, about 520,000 tons of contained graphite. We are over the last hole, which is advancing today. We should basically be wrapping that up. We'll be incorporating about 1,850, maybe 1,900 meters of additional drilling, looking to put out an updated resource estimate and then roll that into our PEA. So again, every hole has intercepted significant intervals, mineralized intervals. So very good results so far in terms of what we've seen, and that continues to be the case. No reason to think that we won't be open along strike and at depth. We have published some initial results. We should have some more results here very shortly. And again, we will be finalizing the final drill hole in the next couple of days. And really, this is the next slide that I kind of want to talk to, because this is really kind of the key to what we see moving forward. And again, how we create value for clients and shareholders. When you think about the space, we are finally in the position to be transitioning from a development company into a producing company. So I think that's really exciting for us, specifically in terms of getting product into the marketplace, developing those important commercial relationships, and being able to develop those long-term relationships that we're looking for. So I think that can't be understated. And again, the re-rating of a company from a development company into a producing asset is really significant. So we look forward to commissioning the plant and getting material into the marketplace. That should result in a significant re-rating. We're in the process of really laying out a series of catalysts here over the next 18 to 24 months to take us into 2025, and incorporating that with really promotional media program so that we get the profile of the company raised specifically around the world. But I think a little bit of love from U.S. investors and European investor goes a long way. So, and that's something that I'm really excited to be working with Roger on, being that he's been involved with U.S. capital markets for 2+ decades, and I think we've got a fantastic story with real fundamentals behind this. And again, our goals aren't to trade paper. Our goals are to put things in production and scale them and be, one of the few companies out there that has producing assets at the right time. We've got scalable, high quality assets, both in Brazil as well in the US. So again, we're not relying specifically on a single source of production. So we've got 2 high quality assets that are scalable in very stable jurisdictions, and a team to deliver on that. So in terms of what we have coming up, and in terms, for Catalyst, again, couldn't be more excited about how the projects are going and advancing. We've got a lot of really good news flow to be coming out that are significant catalysts for what we believe will be higher share price, and we've got the team to deliver on it. And finally, just briefly about the corporate vision and what we've been doing. So we've been very, very fortunate to be able to bring in partners like Sprott, who have contributed $10 million US for phase 1 and up to $18 million for phase 2. We've been able to raise a total of $22 million, just over $22 million dollars over the last 12 months, including bringing in 2 significant institutional investors. So when you look at our current cap table, you've got institutions that have about 40%. You've got insiders that have 10%. I own about 7% personally. So again, I think management insiders are very well aligned with all shareholders. And we've got 2 really strong institutions. This is publicly available, so you can see it on their filings. So we've got Fit Partners as well as Ace Capital that each have come in for just shy of 20%. These are large Brazilian funds that know the battery metal space, know the mining space, have been invested in various different publicly listed companies over the years. So these are partners that bring not only money, but also a broad range of technical management and commercial expertise, and they have very deep pockets. So I feel very fortunate and blessed to have those partners on board with us. They'll be here today, tomorrow, 7 years from now. So these are long-term investors who want to see us have similar success to some of their other investments in the lithium space. So again, couldn't be more excited about having them on board. Again, the announcement around Roger coming onto the board. We also have a gentleman named Tyler Dinwiddie who has joined us as a consultant, and specifically he is bringing a deep level of experience and knowledge around midstream and downstream products as it relates to electrification. So it's alkaline batteries, it's lead acid batteries, it's lithium ion batteries, it's stationary storage batteries, as well as having very good ties into different governmental regulatory agencies. So Ty and I met probably 6 months ago. We've been talking for a while, and very fortunate to have him join the team. He will be working with us really around that midstream and downstream portion of taking concentrate and turning that into the value add sectors and products. So very fortunate to have him joining us. And finally, I think, as Roger so eloquently stated earlier, I think the macro setup is there. It's easy to understand. Electrification is not going away, be it around EVs, be it around stationary storage as it relates to renewable energy sources and things like that. So it's a fantastic time to be involved in critical metals. Jurisdictions and companies are really looking at the geopolitical risks and how they manage those risks. And again, this is nothing new to anybody, and it's not going away now. So this really is going to bring about a decade plus of investments around trying to have a more balanced supply chain. Onshoring is going to be a very real opportunity for us as jurisdictions look to secure critical metals and their supply chain, both for defense, both for their electrical energy requirements, communications, et cetera. So I couldn't be more excited about what we have in front of us. I think we've got fantastic assets that are scalable and stable jurisdictions. We've got the team to deliver on it, and production basically starting in a few months. So with that, I'm happy to open it up for questions.
Well, thanks, Richard. A very thorough and insightful presentation. As Richard said, we'll now move to the Q&A portion of the webinar. And if you're interested in asking a question and logged into the Zoom app, please submit your questions directly in the Q&A module. We've had several come in during the conversation, and so let's just get started. The first question here is, you did address this during the presentation, but worth asking again. When will production begin? And also, could you address cost inflation, if that is affecting the project budget?
Sure. So again, we will basically be starting production at the end of this year. We will have one line that is up and running and able to deliver industrial samples, but phase one will be online, basically full commercial nameplate on January 10th, 2024. In terms of cost inflation, again, this is a credit to the team and executing the fundamentals. We've been very fortunate to be able to not have a bunch of cost overruns. In terms of the inflation, I think we've seen the worst of it. In terms of OpEx, I see diesel and natural gas really being things that will have inflationary pressures on them as we move forward. But again, I think that's quantifiable at this point. So the team is going back through our OpEx as we projected for 2024. We're updating everything, and I should have those numbers in my hands basically in the next week or so. So I don't anticipate any significant changes as it relates to OpEx. CapEx, it's not so much inflation. I'm really more focused and concerned around FX. So when we first modeled this, we were using 525 as our FX. Right now, it's kind of bouncing around 485 to maybe 495. And there's not a lot we can do about that. We were very cognizant of our risk associated with FX, and we're very fortunate in bringing in the majority of the cash at a 540 exchange rate, so better than what we were projecting. But obviously, as we move through these next couple months, we won't be at 540, unfortunately, but we continue to monitor that very closely. In fact, the first thing I look at basically every day is the FX before really anything else. So we make strategic draws on our cash and bring it into Brazil as best we can, and I think our finance team has done a fantastic job of trying to mitigate that as much as possible. But that's probably the biggest risk that I see right now in terms of cost overruns, and it's just compared to what we had previously modeled. Not much we can do about it at this point, other than the majority of the cash that we needed, meaning all our equipment purchases, all that money was basically brought in at a better than projected FX, as opposed to kind of where we're sitting today. But as we move forward, I kind of anticipate that 480 to 490 and a gradual weakening of the US dollar is probably going to be the new norm, let's say. So, as we move through 2024, I honestly don't see us going back above 5. I hope I'm wrong, but I kind of suspect we probably won't see that again, but time will tell. And obviously there's inflation associated with steels and cement and the like, but the team is really focused on trying to identify possible sources of cost overruns. We are working daily around planning our electrical mechanical assemblies so that they always have work fronts available to them, and just really trying to be in a partnership with our contractors so that we deliver on time and on budget.
Great. Next question is somewhat related. I'm not sure if you can put any specifics around this, but this investor is asking, when do you expect to be approaching cash flow positive?
That's a question of price, really. And again, I think as a short-term setup, graphite con prices have been under pressure. And that's really being driven, I think, by a couple of things. One is what's happening in China and their current economic status and the drive towards EVs there. So again, I think that the Chinese economy is a little bit stagnant right now. And it's not that EVs aren't growing every year, every month, every quarter, every year. They're just not growing as fast, I think, as some of the projections we're looking at. So as a result, there's been less demand out there for graphite con. Companies, that are trying to buy graphite concentrate have been more hesitant to sign longer term deals because they see a falling price. So they think, it's better to do a short term deal. And when it bottoms out, and I think we've already bottomed out. And, and a testament to that is our friends at Syrah basically shut down production. So that's an immediate, 175,000 ton per year that comes off the global supply chain. So again, no idea how long Sean and his team will not be producing. Again, I see that as a short-term blip on the horizon. If you look at our basket price, we were at the end of 22, we were at around $1,600 a ton. Our PFS for Santa Cruz was run at about $1,250. Currently, the pricing is about, just shy of 1,100. So at current pricing, we are breaking even, basically. But again, I think it's something that is a momentary hiccup, as opposed to really what market conditions will be as we move through 2024 and 2025. But I think it's one of those things that as all these gigafactories, the latest number I heard, which is kind of exciting, is there's around 400 gigafactories in some form of planning, development, or construction. So it's gone up about 50 some odd gigafactories in the past 6 months. So again, as some of these gigafactories come online in 2024, 2025, it will put increasing pressure on the current supply chain. And really, there's not a lot of new production coming online. So I think we're well positioned. Again, we're trying to put 5,000 tons into the marketplace that it currently is about 1.4 million tons. So it's a drop in the bucket. And I think the idea is that we are in the first quartile of cost, which is important for exactly these moments where we can ride out momentary ups and downs of a commodity cycle and still not be, flowing red. So that's kind of a general view of kind of where we're at and what we see. But obviously, I think 2024, at least based on what we see now, will be very tight margins. As this year kind of develops, I can't believe August is over, but here we are. We're in the portion of the year where seasonal variations happen, and the price should strengthen, combined with Syrah shutting down con production. Let's see what happens over the end of the year. But I think prices have bottomed and will start going up, and we'll see what 2024 brings for us.
Yeah, thanks. That actually addresses another question that had come in regarding the graphite market and where the stocks are trading today, the miners' stocks are trading, and what when you expect things to turn around. And I think you answered that very eloquently. Thanks, Richard.
Yeah, the only thing I'll add there, Will, is
yeah.
I think again, as Roger said so eloquently, I think lithium has had its day in the sun, and has multi-billion-dollar companies that are out there. When you look at the graphite space, and obviously including SouthStar, a big graphite company is a couple $100 million. A big lithium company is $4 or $5 billion. You can't have a lithium-ion battery without both. So again, when we look at the macro trend, when we look at the criticality of the metals, graphite is a great spot to be. I think it's underappreciated and is the critical metal for the EV revolution that I think has the most to run. So again, I think SouthStar as a developer transitioning to a producer, and graphite becoming a higher profile critical metals, I think we're going to have a lot of room to run in 2024 and 25 and beyond.
Great. Actually, that rolls into another question that someone's asked here. What is the best way, given the fact there's no spot price for graphite, what is the best way for investors to be able to track pricing?
I wish I had some insight there. The funny thing about it is that we all rely on self-reporting. So there's a couple different companies out there that every month to every quarter call all the producers and ask them for their pricing. And the funny thing is that we all will lie to them because we don't want to tip our hands. What you can negotiate is what you can negotiate. So I think it's one of those things. Unfortunately, it's not like copper, and I really honestly wish there was a COMEX or an LME or similar for graphite and other critical metals, be it rare earth, be it lithium or others, because I think it would really simplify, I think, a lot of the pricing assumptions that go into this. But unfortunately, there isn't a great spot to look for that. So you've got Fast Markets, you've got Benchmark, you've got Woods Mackenzie and others. So I think there's pricing reports out there. I read, we keep about 60 companies in our database. Our friends at Northern Graphite just put out their quarterly results the other day, and Boogs politely tells us what his selling price is. So again, I think there's some implicit ways to get at pricing that are available to everyone, but it's just one of those things where I think there's not a very transparent process to it, unfortunately.
Gotcha. Along the same line, we had another question coming in regarding Brazilian graphite. Does Brazilian graphite trade at a lower price given that Brazil is not part of the free trade agreement with the U.S.? And when you bring Brazilian graphite into the U.S. to be processed into battery grade graphite, does that make it a U.S. product?
So let me split that into two. Pricing is really around flake size distribution and the quality of the feedstock, and ultimately the midstream and downstream product. So globally, I would put it to you that Brazilian graphite is the best, or some of the best in the world. There's very few deposits out there that have better performance characteristics compared to Brazilian graphite. So on average, we will get a higher price per ton for the concentrate, and because of the crystalline nature of the Brazilian natural flake graphite and the way the contaminants are contained within the structure, it's very easy for us to upgrade those materials. So I would say that in general, Brazilian graphite, both for con as well as midstream and downstream products, will get a premium price for that. And so I think that's a positive there. As it relates to, bringing it into the U.S., because we have to follow IFRS rules, we will basically be looking at transferring that via transfer price rules. So we will bring that at quote unquote market prices, let's say. And the way the IRA is set up, it's a scaled process. So I think right now it's 40% has to be produced in the US. And that I think through 2029 goes up to 100% produced in the US to get the full tax credit. So it's $7,500 a car. Let's say Will goes out and he buys a Tesla. Today, 40% of that car has to be sourced in the US to get the full credit. In 2029, it basically all has to be produced in the US for you to get the full 7,500 tax credit. So when we look at that, it's really around the value add chain. So again, if we take con and on average, let's just assume it's $1,200, $1,300 a ton, then the upgraded material that gets put into a Tesla or Ford or GM or whoever basically is, depending on the spec, $8,000 to $10,000 a ton. That's the component that then would be calculated as a percent of made, quote unquote, made in America. So that's kind of the math that they have to go around it. So again, because the majority of the value add as it relates to coated SPG would be done in the US. And again, all but a very small fraction of that would qualify our material for the full IRA $7,500 tax credit. And obviously everything from Alabama would qualify for that. So again, I think multiple assets in stable jurisdictions is a huge advantage. And we're able to bring the first material online from Brazil in a relatively short amount of time. So again, we are looking at setting up our midstream, downstream processing in phases in that Southeast corridor. And I've asked our potential partners here on the PEA to put together 3 scenarios. The first phase is what's the smallest profitable unit that I can set up so that I can get material into the marketplace, deliver spec material while we're qualifying. Phase 2, again, would be somewhere around 25,000, 30,000 ton per annum. And then phase 3 would be stepping up to, a total of 55 or 60,000 tons. Again, that sizing will be based on equipment sizing, but overall, I think we're extremely well positioned and to have vertically integrated production that will qualify for the full tax credit.
Great, thanks. The next question: do you have any drone footage of the plant construction?
Yeah, so we put out updated time lapse. We should have another one coming out in very short order. And then at the end of September or the first part of October, we have a drone flight scheduled when the majority of equipment should be on its foundation. So we will have basic time lapse, which will incorporate all of August's construction. I think July is all up on our website as well as on YouTube channels. And then we will be flying drone footage here at the end of September, first part of October, that has most of the equipment sitting on its foundations and electrical mechanical assemblies running around it.
Very good, great. Look forward to that. Next question was regarding the recently announced additions to the management team and board. Why are these roles important, and why now?
Why now? I think as we move into production and move down our path towards the value add component, we need that technical expertise. And again, I think that's where Ty really feeds into this. And, you know, Roger, please comment on that. I think you're probably the best person to, you know, to respond to that. I couldn't be more excited to work with Roger and you know, learn from Roger and really, you know, I think it's going to be a fantastic addition.
Yeah, Richard, I'd say that what I bring at this stage is a knowledge of the global mining investor community and the institutional investor community, and an understanding of how to help Richard position the company to these investors and engage with them as our capital needs grow over the next couple of years. So this is a strategic process of identifying and engaging long-term investor partners and building those relationships and communicating effectively with them. And you know, that's an area where I think I can add some value.
Absolutely. And again, I think Roger's experience in both US, Canadian, Australian, European capital markets, you know, my take on it, again, I don't come from a capital markets background. It's like a sales sort of approach. It's strictly a numbers game, and it only takes a couple. So when we look around at the investment space, you know, if I can find funds, investors, family offices, et cetera, that know the mining space, better yet, know critical metals, and the Holy Grail is one who knows mining, understands critical metals, and is familiar with and has invested in battery metals, that's like the Holy Grail. So again, as we look around the globe for potential sources of capital to help us scale this thing quickly, there's just not that many. So again, I think Roger's experience in being a energy investor specifically focused on alternatives is invaluable. So very excited to be working with him. And again, I think Ty's experience around the midstream and the downstream, and being able to look at real viable battery designs, applications, you know, testing, et cetera, and sit down and talk the talk. When you sit down with an LG Chem, when you sit down with a Panasonic, an SK, a BYD, whoever, and you want to talk batteries, it's a very specific conversation. You have to have that expertise. And just as importantly, you have to know how your material performs. So I think that's really where Ty is adding a lot of value. When we sit down with battery manufacturers, we will already know how our battery performs in a variety of different blends, including doped with silicon, including mixed with synthetic, and then comparing those to benchmarks from each one of those battery designs. So again, I think very fortunate to have Roger and Ty starting now, and we're basically looking to accelerate our advance and development as quickly as possible.
Great, thank you. This question, someone's asking Roger, actually, what do you think STS strengths and weaknesses are, and challenges that they may face going forward?
Well, I think I made, you know, some of those comments in my opening remarks, but the real advantages that this company has are the location of its assets, that it has assets in what I would call secure production zones. This concept of deglobalization and the safety and security of supply chains is something that is becoming increasingly important. And the United States' ambition to electrify its economy and build these huge number of battery manufacturing facilities, the allocators of that capital will be extremely mindful about where the source materials come from, both with a view to potential for disruption for logistical and geopolitical reasons. And the fact that SouthStar today is transitioning from a developer to a producer, which is a re-rating lever, and then is going to develop a continental U.S. production site for batteries. This is extremely unusual in this space. So you have a very positive macro backdrop for graphite itself, and then investor scrutiny is going to start to focus on, well, where does it come from, and what is the geopolitical risk associated with the production? My belief is that American-sourced assets, both the Americas, including Brazil, but particularly U.S.-sourced assets, are going to trade at a premium. Investors are going to put higher value on those businesses over time, and so that was a big part of the attraction to this company in particular.
Great, fantastic, and we've got time for one more question, and it really rolls into that: is why is this now a compelling entry point for investors? And if you could reiterate the milestones that you see coming up over the next 12 months or so, Richard.
Sure. So let me take that in reverse. So in terms of milestones, again, obviously, priority number one and focus number one is near-term production at Santa Cruz, which will be online at the end of this year. Our phase one will be 5,000 tons per annum of con production. We'll follow that up basically with our PEA, which will present 2 mines, each producing concentrate and around 60,000 tons of value add material in that southeast corridor. That should be out basically in March of next year, 2024. We should have our feasibility study for Santa Cruz, which will present phases 1, 2, and 3, so up to 50,000 tons of concentrate for Santa Cruz at the end of 2024, December 2024. And again, we will be looking to basically take that PEA that presents the strategic vision of 2 mines producing con and a value add plant to a feasibility study at the end of 2025. So we've got studies, we've got results of battery testing programs, we've got prototypes that are being built, we've got long cycle testing, we've got increased production and near-term production. So again, I think what we see is a company that has extremely high quality assets that are scalable and very stable jurisdictions, and a team to deliver really on nothing other than just fundamental execution. So I think we've been very fortunate to assemble a team from safety engineers all the way through to battery specialists to be able to help us move quickly in an environment and a time when the macro setup is really focused on securing a more balanced supply chain. So I think, as Roger said a couple of different times, I think we've got amazing assets that are extremely low capital intensity, will be very low quartile of cost. Santa Cruz will be in the first. BamaStar will be a little bit more expensive, but again, I think overall we'll have very favorable economic results that can be scaled and be able to bring high quality material to clients when they need it. So all the battery companies, be it alkaline, be it lead acid, be it lithium ion batteries, all they want is spec material that they're used to getting on time and as promised and on spec. And if we can do that and develop partnerships with these different companies, we'll be wildly successful. So I think graphite will have its day in the sun. I think SouthStar is one of the most compelling stories out there. If you look at comps, again, there's only a couple out there that are re-rating from development into producing assets. And all of those are, 10, 20, 30 times what SouthStar is worth currently on a market cap basis. So I couldn't be more excited about 2024, 2025, and the team we've assembled to be able to move this thing quickly.
Perfect. Thanks, Richard. And thanks, Roger. And thank you, everyone, for joining us today's webinar. The webinar recording will soon be made available on SouthStar's website. And if you have any additional questions, I know we weren't able to get to all of them, but please send in your questions to southstar@rbmilestone.com. Again, that's southstar@rbmilestone.com. Thanks for everybody, and this concludes our webinar.
Thanks, Shell.